Now, moving on. Market moves in the first week of September reflect deepening worries about the U.S. and the global economy, driven by the uncertainty about President Trump's policies. Trading last week more or less mirrored Trump and his chorus-singing administration's rhetoric and a weak U.S. jobs report. But too much is resting on U.S. courts after the latest ruling of Trump tariffs being illegal. The volatility and the market moves last week showed the legal challenges to tariff to play an important role in the days to come. The big wild card would be if the Supreme Court strikes down Trump's country-specific tariffs. Now, there would be chaos in global markets, no doubt. But there are plenty of other powers at the president's disposal to impose tariffs through other means. In August, gold made a remarkable comeback, and that trend continued to play in the first week of September. The yellow metal gained another 3.5% to fresh record high last week after surging of 5% in August. Crude oil extended August decline, falling 2.7% last week after August's nearly 6% slump. Bitcoin, on the other hand, recovered some of August's 6.8% losses last week. Trump claims millions of dollars in revenue from tariffs, but the U.S. currency took a beating, reflecting investors' bet on who is actually winning. Investor caution is also driven by fresh political pressure on the Federal Reserve. Moving on to the Asia-Pacific stock markets, China's main stock index reversed August gains to fall 1.2% last week. The OC index also fell 1.1% last week to make a U-turn from August 2.6% gains. Japanese stocks, though, continue their positive trend to add 0.7% to August 4% gains. On the other hand, Indian stocks gained ground, rising 1.7% in the first week of September. India's benchmark Sensex index had closed out August with a 1.7% loss. In the Americas, Wall Street stocks hit fresh record highs but pulled back towards the end of last week. However, a tech rout weighed on the sentiment for stocks. Last week's wobble offered insights into what to expect in September, but Brazilian and Canadian stocks continued to show grand gains to reflect a different mood for these countries. Across the Atlantic, European stocks reflected the reality of the global economy. The nuanced moves in benchmarks across the region showed mixed sentiment, while the UK's FTSE extended August gains. The French CAC and the German DAX ended last week in the red. The South African stock index too reversed to fall marginally. What happens in the Russia-Ukraine peace talks is likely to drive European stocks in the months ahead, rather than Trump's drama on social media, that is. Now let's turn our attention to the overall economic outlook. Let's take a look at the Asia-Pacific region first. Trump's trade war worries have weighed on the outlook for global economies. In Asia, India is still expected to be the fastest-growing major economy in the world. However, a standoff with the U.S. on tariffs is likely to weigh on India's growth. The outlook for the rest of Asia remains negative. For China, the outlook is still marred by doubts from the recession in its real estate crisis. The economic outlook for Japan and Australia mirrored worries from Trump's trade war. In the Americas, the economic outlook for the U.S., Canada, Brazil, and Argentina shows trade tariffs are likely to hurt economic growth. For the U.S. economy, recession bets are back after the latest jobs data showed a deteriorating outlook. The Fed boss hinted at a rate cut as early as September. However, tariffs are starting to show up in inflation. Now, that is likely to complicate the central bank's rate path. Separately, the economic activity expectations for Canada, Brazil, and Argentina were also cut. On the other side of the Atlantic, the negative outlook was more widespread. The expectations show the clouds are darkening again for the UK and other European economies. As for Germany's June quarter GDP data saw the economy falling back into an even worse contraction. The size of the German economy is currently still slightly below its 2019 level. Now, that is probably the best and most painful illustration of stagnation. The story wasn't very different for African economies, where the outlook remains negative.